How are we? I love that little laugh at the end there. That means we're going to get some great energy and some great laughs. Can everybody see me over there? All right, good. So I like this little bridge conversation around software, kind of like protocols into software. When we talk about software, we got to go back to 2011. We have to go back to Mark Andreessen. We have to go back to software is eating the world, right? So I'll start it, and we'll do intros after this. When I think of software, maybe SaaS in our world, it's ubiquitous, right? We're talking about Salesforce. Other audience members, other softwares and SaaS protocols that you use in your daily lives. Shout them out. Adobe. Who else? What? Adobe. There's only one you use. Slack. Others. Anyone?
Telegram.
Notion. I mean, we use them every day, right? So essentially what we're going to do here is we'll do intros, but that's what we're going to do is the ecosystems and the protocols of today that we know in Web3 will become the SaaS platforms of the future that we know and love of today. So we're going to start to my right, Sandra from Outlier Ventures, Trevor from Stacks, Andrew from Republic Crypto. Great panel today. So we're going to start with this as context, right? Burgers. McDonald's, In-N-Out Burger, okay? They both do burgers. In-N-Out Burger, massive lines, cult following. People are getting tattoos of burgers and the logo. McDonald's, I don't know many people that are getting McDonald's tattoos. They both serve burgers. So we're going to start. Andrew, Trevor, I'm going to jump to you. What makes a fervent ecosystem? What makes a passionate ecosystem and a protocol that's sticky in the way that you would get a tattoo of an ecosystem on your shoulder?
Yeah, hi everyone. Great to join you today. And I think what it comes down to first probably is just solving a problem. So having a technology that addresses a unique lane in the market. And so we've seen with the Passwave scalability, the cost of transaction fees being a big selling point for some of the new L1s like Solana, Avalanche, and also leading to a large adoption of Polygon and Arbitrum, et cetera. And I think that with Stacks, for example, we've taken a different route to go after the ability to use Bitcoin as a native asset without custodians in Web3 such as DeFi, NFTs, et cetera. And so when I look at the market going forward, I do believe in a multi-chain universe where there will be several winners that have different strengths and weaknesses, and as well, I think the winners will have a specialization. And so when I look at these ecosystems, I think it starts with solving a problem, having a unique lane and value proposition for developers, and then building that community and building that ecosystem from a leadership perspective. And so, one of the things that I looked at when I was getting involved in Stacks was the leaders and their collaboration across the ecosystem. And so you can get a very good sense for the strength of an ecosystem by talking to the leaders, seeing how they engage with each other. There are some ecosystems that are very successful where the leaders don't get along because generally blockchain ecosystems have multiple entities. Ethereum, they have the Ethereum Foundation, they have consensus. They're decentralized. Stacks is not a single company. Ethereum is not a single company. And so how do those companies work together and build on each other? And then how do they build their community focused on solving a core technical problem for use cases in the market? I think that's, for me, what makes the most sense and also what has informed my decision to focus on Stacks.
Yeah, I mean, Stacks is all over, right? We're talking trust machines, it's Hero, it's a SAC ecosystem, so it's not just one thing. And you're, like you said, chain agnostic, ubiquitous in a way, right?
Yeah, absolutely. And our fund is also an independent fund, so we're not like a strict corporate arm of, where I have to get the CEO's approval or the business unit's approval to invest in a company. We have our own dedicated fund. We act independently. We also invest outside of Stacks in the general Bitcoin ecosystem. In the past 14 months, we've actually been the most active investor in the Bitcoin ecosystem. We write small checks. And so, we also as a VC fund are very focused on identifying our lane in the market and focusing on that unique value proposition.
Well, this is interesting. Sandra, we were chatting backstage a little bit about, you're at Outlier, right? So you're touching early stage, a lot of protocols, a lot of ecosystems. And, one we mentioned backstage was Polygon. Can you just give us an example? I know you're, multi-chain, but how do you work through that and how around governance, liquidity, the foundation, how does that look as far as how you evaluate and move it forward?
Sure. I don't know if anyone's familiar with Outlier Ventures. So we're the biggest Web3 accelerator in the world, but we partner with different protocols. So for example, one of them is Polygon, another is Filecoin, Hedera, and then we have a general agnostic accelerator too, and then also DeFi, fashion. So we have over 7 accelerators, and we've done over 200 investments. And so what we really want is to really build these ecosystems invest in other leading ecosystems, because to us, that's kind of de-risking our investment, because you have these big communities which are already very successful. We only look at the top 20 to partner with, so we don't go beyond that, because we know once they're that top 20, they already have a lot of traction. They have the community. They have developers building on those ecosystems. And so they have a stronger layer, a stronger technology, so we know those investments that we're putting into those companies, they're backed by big communities, good mentors. So for example, with Polygon, we really like working with them because we're very close with the founders. They're very interactive, they're very flexible, and I feel like these are the type of people that will lead Web3 forward. We don't want scammers that we've seen in this year. We want people who actually care about the communities. And so that's what we look for. And Polygon, not only do they support our accelerator, they do follow-on investments, and they also do, they provide grants to the ones that we actually reject on our accelerator program. So I think there's so many benefits with partnering with ecosystems, because they can leverage our expertise in tokenomics, legal, whichever accelerator programs we have, but then we can also leverage their community, their builders, their Telegram groups. So it's bringing synergy into the space.
Yeah, Andrew, I'll call you backstage the startup whisperer. You've seen a lot of fundraisers, crowdfunding. I mean, you've seen everything. So when do we get to the place where we're talking about some of these protocols and ecosystems, like we talk about a Salesforce on the front end, like a Twilio on the back end, some of these things that we all know and love from our B2B and B2C world? And what do we have to do to get there?
It's still going to be a little bit of time. The reality is it takes about 20 to 30 years for humans to adopt a new data transfer technology. Radio came out in 1889, wasn't in homes until the 20s. Television came out in the 20s, wasn't in houses until the 50s. TCP/IP came out in 1970, wasn't until 1995 that when TCP/IP was launched with Windows 95, right? And this isn't a technology problem; it's a human problem. So there's actually a really interesting parallel that runs between TCP/IP and in the Web3 space is, so in in 1983, TCP/IP became the accepted standardization for protocol for the development of this early stages of the internet. So it's 13 years after TCP/IP was created. So here we are actually 13 years since when Bitcoin was created, and we're just starting to see standardization now. Yep. And there's a lot of parallels, not just in that framework, but other frameworks that match that. So are we in 1983 the internet? Probably not, because there's a lot of things that we have now that we didn't have then. A lot of globalization. This is open source products, so people can build on each other's work. It's not highly protected IP in a lot of cases. And all programming languages are in English. And so it's these factors that will allow us to accelerate that. But by how much? I think everyone wants it to be a lot faster than it is, but we're still, I'd say, 5+ years or so.
Let me push you a little bit. I know all of your children are beautiful. Everyone's your favorite. Who's gotten it right? I mean, who's really getting it right that you've been impressed with from an ecosystem that's been driving it forward, that you said, you know what, they're nailing it?
I do. I love all my children. I think the truth is looking at it long term, like not taking shortcuts early on is really important. We spend a lot of time following developers. So looking at, and everyone has access to this. You can look at any of these protocols and see, how many other products are being built on it, in their public repos, and public repos are where code is deployed. And you can see how many people are deploying code, how active are these communities, how many people are building on it. You can see which projects are dying, right? That's very evident, and which projects are growing. And this is not lost on those children now, right? Yeah. They know, they're very well aware, because it's all public. This is all verifiable. So I think the big push right now is making it easier to onboard developers, right? If we look at that the 13-year example, every 13-year-old on the planet has only existed in a world where Bitcoin's existed. 3 years from now, every 16-year-old will have existed in a world where Bitcoin's existed. That's kind of when you start becoming a developer, making sure that you have onboarding tools for those individuals is really, really important. And we see that now. We see that with, Avalanche has done a really good job of building really clear SDKs. You have groups like Aptos or SWE who came out of Facebook. Their documentation, their onboarding documentation for developers is level 8 Facebook level engineering documentation. It is very commercial. And so it's a lot easier now to bring new developers into those spaces because it's being done at that level.
Yeah, and even to add to that, right, it's a little, we've heard about the bear market, we've talked about it here for a few days, but right, we talked about it backstage, G7, 500 million, 100 million of a foundation and a grant for developers, so people that are building, if you're still building, specifically in GameFi, shout out to Priyanka, there she is, good morning, how are you? Ready for lunch? Good. So let's just shift a little bit. We had the burger example earlier. Let's shift to fries, okay? There's a great video of Mayor de Blasio kind of giving away free fries and eating fries on camera to get workers to do like a COVID vaccination. Incredible, right? Please watch this video. So they're incenting somebody to get a vaccination, right? With French fries, okay? So let's talk about within these ecosystems, what have you seen work, right? Let's start with Sandra, and we'll go to you, Trevor. What have you seen work, and what have you seen not work as far as incentives to get people really sticky in these ecosystems and building?
Yeah, so I see what works is when protocols partner with other like platforms, market makers, making sure that the ecosystem is there. So when a builder is there, they have incentives with other platform providers. So for example, with Polygon, they have a partnership with Aave, and then they gave a grant for liquidity mining to the developers who use the Polygon Aave tools. And so I see a lot of cross-collaboration works. Also, when they have grants and they're actually very specific to a certain factor that they want built, rather than just very generic and
yeah. So not spraying and praying, but saying
exactly.
I want this done. I'm incentivizing this behavior.
Exactly.
Love
so
it.
like per quarter, I want to build this. I want this on our ecosystem. So that's where I see it works. So when I see it doesn't work is where exactly what you're saying, spraying and praying that it goes well.
Yes.
And you know, a lot of the times I see those projects, they fail and they run out, or they buy like random things and they don't actually build the projects.
Yeah.
So I think it's all about focus, and that comes from the leadership and from the top.
Great, love it, Sandra. Trevor, same to you, and I like the leadership little bridge right there. I mean, you've worked with incredible leaders. How are they doing it right? How, from the top down?
Yeah, totally. So with Stacks specifically, it's less than 2 years old, and so we are in the infrastructure building phase, enabling technologies, developer technologies, et cetera. I like what Andrew said about really the time horizon that we're looking at is much longer than I think most people realize. All of these major technologies, including the internet, were developed 1970, right? And so the way that we look at our job within Stacks is to be almost as not just allocators of capital, but also allocators of human capital. And so that is really being hands-on with early stage teams, going as early as possible, helping them go to market, figure out their business model, pivot, identify the customer segments that they need to focus on, and also matching people across the ecosystem. When it comes to capital specifically, capital is not the most important thing. Quality over quantity. It doesn't matter how much money you have. There's so many examples of startups having too much money and that being the cause of their failure. And so it's really about being capital efficient in the early stage, taking risk off the table in your go-to-market being the biggest risk that every startup has next to the team and the team chemistry and the team alignment. We work on both of those things to take risk off the table, and we want to work with as many entrepreneurs as possible. So we're not the type of fund where we think like you have to be born a certain way to be a successful founder. We would want to invest in anybody in this room, so anybody after this, feel free to come and pitch me. I'd love to hear from you. We're not obsessed with the billion-dollar outcomes. We believe in doubles and triples. We believe in the long-term focus where you're a founder today and maybe you have a $10 million exit or $20 million exit. We get some of our capital back, but then you start your next company. If you look at it, an entrepreneur like Elon Musk, his first company was Zip2. He sold that and made $20 million. His next company was PayPal. He sold that and made over $100 million. Then he started Tesla and SpaceX. And so I'm looking at this from a time horizon perspective, the difference between a first-time entrepreneur and a second-time entrepreneur, even speaking for myself as an entrepreneur for over a decade and a developer, night and day difference. It's so much easier your second time around. And so we want to be your partner from the earliest stages and then be there for even a small success. You know, some people will go to the end from the first round, but for those who don't, we also want to be your investor in the next time you do it.
Andrew, jump in there.
Yeah, I mean, the long time horizon is definitely the answer here. I've been in this space for over a decade. I've seen every winter. You know, the only difference is between me and the newer people is I just suffered a lot more. So it gives me a little bit of a different perspective on how I look at this. And by the way, nothing will ever be worse than Bitcoin crashing from $32 to $2 in one day. That was the worst. I unplugged all my mining equipment that day. That was like the really big one. But all the best stuff is built in the winter. I actually hate the hype cycle part because it's just a lot of noise. You're in this rat race. Everyone's competing for these allocations. They're all crazy, these crazy valuations. I actually think they're really damaging to the ecosystems, especially the ecosystem funds. Like we structured and did the raise for Avalanche's ecosystem fund, for Polygon's ecosystem fund, for Near's ecosystem fund. We're the only company that does that type of work. And those hype cycles are just crushing to those war chests because they all feel like they need to participate. They all want a piece of this next hot thing. But you know, it's still startup, so most of those things all fail, right? And you're way out over your skis when it comes down to it. So, you know, this right now is over the next, you know, whatever 6 months, year and a half is the best time because you start to see a lot of consolidation. Like all the protocols you all know in this room were all built in winter, right? You know, your Solanas, your Avalanches, your Polygon, those are all winter products. And it's because what happens is developers aggregate. Once capital dries up, maybe not our capital, but some other capital dries up, and developers have to re-aggregate to projects that have a little bit more traction or a little bit more substance behind them. And those are where real things are being built, you know, and it's not fuzzy cats and monkeys and all that type of stuff. It's actual infrastructure. We are in the infrastructure phase still, right? Those 13, 16-year-olds, that's the adoption layer. Everyone here wants to be the adoption layer because that's seemingly the cool place to be, but we're just not. We are building the pipes and the roads and the airports and all that type of stuff. Yep. So keep your eye out for those types of opportunities because there's still a lot of alpha that sits at the infrastructure layer.
Yeah, and this, just for everyone here, a big acknowledgement for all of you for being here. This is, while you're here, this is a truly, truly global east-west, north-south phenomenon. You're all part of the ecosystem now, so the ownership of driving it forward and building and investing every day, right, that's you. I'm a football fan, very famous offensive lineman for the Dallas Cowboys, Larry Allen, right? Even though I'm a Cowboys Giants fan, he would say, look, when I failed, 45 seconds later, I had a chance to win. So I think that's how we look at it when we move forward. Okay, so we're gonna spend the last 1 minute and 40 seconds on one of my favorite podcasts is Invest Like the Best. Patrick O'Shaughnessy ends this podcast with the same question for everyone. And we'll start, Sandra, with you. What is the nicest thing someone's ever done for you?
In crypto?
In your life.
In my life, wow.
Or your life is crypto, perhaps.
If I say something lame, that's like a really sad life. The nicest thing, I guess, is my family being there for me all the time and like helping me, like not criticizing me on my steps in my journey and allowing me to do what I kind of truly want, especially with like an Asian family. Yeah, so I think because I did leave banking once, and then I kind of started my own company for a few years, so that was a big change for them, for me. So yeah, I think family is important.
Nice. Trevor?
So it's a long story, but I don't want to get across quickly, but you know, I've been an entrepreneur for a decade, and one of my first companies was quite a painful failure. You know, we raised venture capital, we weren't able to get to the Series A level, and as a first-time founder, I think you take your success or failure very personally. You know, your company is a representation of who you are when you're just getting started. And I think during that time, I was very lucky to have some fantastic investors who allowed me to get past my own failure and see that I had other opportunities in front of me, and I think that was a really changing moment that I reflect on as a way that I can help the founders in my portfolio when not all of them are going to be successful. In fact, we've already had some failures within just starting our fund recently. To be there for those people as a mentor and guider and someone with more experience is something that has made a big difference in my life as a founder.
For me, it was in 2009. I met one of my bigger business type idols. I won't mention his name, but multi-billionaire. And it was very casual. It was complete by accident, in fact. And he had told me, and this was I was early in my startup life, that you don't need every customer. You think you do. You want every customer, but you know deep down inside there's that one customer that you just should not take because it's going to be more pain than good. And that really guided me quite a bit.
Yeah, this is great. Thank you. Well, we're on time. I'll give mine. Sandra, I really resonate with your answer. Mine is legacy. Mine is my family. Mine are my grandparents coming over the country. My father is sitting right here. Big thanks to him and my mother for being together for 54 years, teaching me everything I know. And it's my sister's birthday today, so family is everything. Have a great day. See us afterwards. To the moon.